Hello and welcome to the special edition brought to you by Republic Business. I am Gunjan Rajput and we are back with Decoding the Market. Today we are joined by a very special guest, Mr. Sudeep Shah. He is a Deputy Vice President at SBI Securities. Sir, if we speak about today's market downfall, the Sensex tanked over 4,000 points and Nifty crashed over 5%. What's your outlook on that? Why the market is falling now? The 2nd April jitters are already over everything, but still, why is it happening now?
See, it's not about why it is happening now. The announcement which was made on 2nd April was not. I guess it has taken time to decode how businesses will get impacted, how sectors across the continents, across the countries will get impacted, how the trade relations between a lot of countries will change. Now, it was 2nd April was the day when US has announced tariffs. A day after or a couple of days after, China has retaliated with, say, a 26% additional tariff on the US. And now, while a lot of countries are from the back door negotiating with the US, now there would be some who, like China, who would come and retaliate. So this is not a good scenario. It's kind of an ugly scenario which is going on in world business and in trade relations. And that is the reason the markets are panicking. And a straight reflection of the panic could be from the US CBOE volatility index, which has risen a record now. It's above 45 levels in the last history, I guess, right from 2008, that Lehman Brothers crisis, then COVID. In between, there were some other couple of instances, 5 instances where CBOE VIX has rose by say above 45-50 levels, and this is one of them. So this speaks the magnitude of the issue, and it's even in the last say 2018 and even in 2023 August September time, when S&P 500 had fallen massively. Even on that occasion, CBOE VIX had not risen beyond 45 levels. So right now S&P 500 is at 5,000 levels, much above those lows of 2023, and VIX has risen higher to that level. So that speaks the magnitude of the fall, and I feel investors and traders need to be nimble-footed in the coming week and just take every day as it comes.
We already know how the US market fall yesterday, and after that Trump gave a statement. He said, I don't want anything to go down, but sometimes you have to take medicine to fix something. And after that statement, suddenly the Indian markets tank over 4,000 points. What do you think this can be one of the key reasons behind this downfall?
See, Trump is the main reason behind all the downfall. So every day morning, you wake up, rather than wishing anyone good morning, you just have to check your mobile phones and just see whether Trump has given any statement or not. So this is the way life has been in the last 1 week. But this is what you can expect with Trump. A lot of uncertainty, a business-minded person entering into politics and trying to dictate things to the world. This cannot go very long. Even he'll have to come to order because please understand one thing, and it is for the benefit of every viewer also, that while we are panicking with the kind of fall and because of the way it has come too soon, which was not expected. But if anyone understands business and geopolitics, what is important here is that Trump is trying to he's just trying to dictate terms wherein he wants manufacturing to go back to the US. He wants either you come back to come on the same tariff level as you are charging, and we also pay the same. But generally this does not happen, because the way China, Vietnam, India is having manufacturing scale, it's not the same with US. And if US has to reach to the same level of manufacturing, it's going to take another decade for them to reach there. So somewhere even he'll have to come back on middle grounds. It is just that right now it's the first mover's advantage is what Trump has taken. And I feel a week or 10 days from here on, a lot of negotiations will start, a lot of give and take will happen, and slowly and steadily it will come back to normal. But yes, the price damages which have happened may take a couple of quarters or say a year to recover, because this is the kind of sharp moves that has not been seen in the last several months. The last time we saw such a fall was on the day of election results. And post that, we have not seen such deeper cut and with volatility spiking to such a magnitude.
So people are calling it Black Monday 2.0. What happened in 1987 feels like it's again back in circles. What's your outlook on that?
Yeah, I see. It's Black Monday 2.0 or 3.0, but it's not a good scenario from an investor perspective, from a trader perspective. Such days are very tough to mitigate. You don't have anything much to do here. See, because when the markets are already opening gap down, whatever positions are in a loss at the opening would remain that. You just have to do one thing in such a scenario as an investor is, in case you have any stocks which you are eyeing to buy from a 5-year, 10-year perspective, such are the occasions where you could add that to your portfolio from a long-term perspective, and don't add the entire 100% capital which you have. You can just split it into say 4 or 5 parts. Say one part here, another couple of days. If the fall persists, then another part there. So you're not buying anything from a 1 day or a 2 day recovery perspective. If your goal is to create wealth over a decade or over 5 years, then this such opportunities when the volatility spikes like this are God sent opportunities for investors from a fresh investment perspective.
Sir, if you talk about investor wealth today, nearly 19 lakh crore vanished in a single day. At this moment, as an investor, should we buy, hold or sell?
Hey, that's what I was just Gunjan referring to. That as an investor, if you're it all depends on your horizon as well as your risk taking ability. If you are a risk taker, if you are a trader, then I will still recommend to wait for a day or two. But if you are an investor and if you have patience and if your view is to create wealth over 3, 4, 5 or 10-year period, so for such investors, these opportunities are very rare, where you get some decent stock at a bargain price, and this is the time where you need to add stocks to your portfolio from a long-term perspective. And only one thing every one of us need to take care here is that don't invest the entire 100% capital into one in one shot. You will have opportunities like this because with Trump giving statements on a daily basis, you might have opportunities for the next 1 week, 10 days, 15 days till the time the entire issue gets settled. So you have to wait for such opportunities and keep adding stocks, good quality stocks. And adding stocks, you don't, with that, I don't mean say a small cap or a risky mid cap. It has to be a large cap. It has to be, even in a mid cap, it has to be a sector leader. The reason is because when the market will rebound, the first buying will happen in quality names, the large caps as well as quality mid caps. They will get the first advantage of a recovery or a relief rally. So that is where if you buy right now, you will be able to enjoy the fruits of that relief rally. Or else, if you don't want to do anything, there's absolutely no problem. Just wait for a few days, let the entire situation pass by, and then take a call after analyzing and assessing the entire scenario.
All right, sir. So, at this moment, should investor continue their SIPs or not?
Absolutely. There's no case in say discontinuing SIPs, because if you continue your SIPs in rising market expecting a further gain, in falling markets you'll get more units, so you'll get a better average price. And while the markets will rebound, those higher units bought at a lower rate will give you a higher return, and that will see that this is how your compounded return formula, the entire returns metrics works. If we see say a returns fact sheet of a lot of MFs or a consolidated fact sheet, when we say that it's a 1 year, 3 year, 5 year, 10 year return of say 15%, 18%, 20% CAGR, these kind of returns are always factoring in such lower prices on such days, and then only because if you don't buy at lows, then these returns will never be a reality. So I feel these are the times where one should not panic. If not increase your exposure, but at least maintain the same level of exposure or same level of SIP which you are continuing. And I guess these times will pass. It's just a passing phase now. And whatever destructions has already had to come has already come. So now, if you discontinue your SIP, it will not give you any say benefit from the current levels.
All right, sir. So, what's your prediction for today market closing?
Gunjan, that's the most difficult question you are asking me. I guess you have kept the most difficult question for the last. But on a serious note, yes. See, it's 21,950, 22,000 indices post opening. They have tried to hold on to these levels. And remember, the most important support from here is still 700 points away. 21,280, 21,300, that's the election day low, which the markets had registered. But my sense is that, in a way, the way Indian markets have behaved post opening, that shows some kind of a maturity. And while the global markets, the world markets, Asian markets are down 7, 8, 10%, they were some markets were even at a lower freeze, low circuit early in the morning. There is slight recovery there also. But the way Indian markets are holding grounds, I feel 21,700, 21,750 now remains an important support. And we could stay range bound between 21,700 and 22,200, 22,250. However, all these levels right now kind of are immaterial. If you ask me my view, it is important if for the markets to stabilize here at the current levels. We don't see any price-wise destruction, and if the markets are stable here for a couple of days, I guess the storm will pass away.
All right, sir. So, before we let you go, I want to ask, what can we expect from tomorrow? How market is going to surprise us?
I don't want to be surprised with the markets. I am okay with if the markets stay at the same level. Let's not wait and expect surprises from the markets. The last few days, including today, we have had enough of surprises while we have got up and while we have approached the screen at 9:15. So that's what I was mentioning, no, that it's okay if the markets consolidate, say somewhere between this 21,700, 600 mark and 22,400 mark. It's a wide range of 7, 800 points, but such is the volatility that the range is going to be wide. So I feel consolidation for me will be the best order of the day, and not necessarily be surprised. But yes, an important event on 9th of April would be the RBI policy, and we'll have to see how the RBI reacts to this entire situation, whether they go ahead with a rate cut, or if at all they go ahead with the rate cut, then is it 25 or 50 bips? Given the scenario which is right now developing in world market with the trade relations being impacted, and a lot of orders of our companies also who are exporting abroad, they are likely to get cancelled or reworked or revised, and a lot of interest obligations on those companies. So how, if the rate cut is going to help these companies in any manner, then what is the quantum of the rate cut? So, and the stance of RBI going forward. So, all these things will be extremely important, I feel, and that is the reason we need to just stay a bit calm for the next few days, take every day as it comes, and don't be overexposed, over leveraged in terms of positioning in stocks or indices.
All right, sir. Thank you so much, sir, for joining us on Republic Media Network. It was such a pleasure talking to you.
Thank you, Gunjan.